Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Hey, thank you, Jeremy. Thanks for our listeners jumping on the call. We had a lot of U.S. equity volatility. That was a fourth straight week where we saw the U.S. equities falling amid Middle East conflict affecting the energy markets. So we saw Brent WTI crude spread widen to its largest in 11 years as Brent surged on supply risk. If we look at the WTI crude fell about 1% to about 98 at one point. Then it spiked above 119 before settling in about 112. If we look at European natural gas prices, that took the biggest jump. That was up nearly 30%. We did see some relief emerging. Several European nations, Japan offered support to safeguard or guide some tankers through the Strait of Hormuz. On the energy and financials, those were the only two sectors of the S&P that were up. Energy is actually up for the year about 32% year to date. Now, if we continue to look at the markets in a little more detail, we looked at the S&P 500 and the Nasdaq. They both fell 2%. And we saw the Russell Small Cap 2000. That dropped about 1.7%. Now, Treasury yields, they climbed sharply. Precious metals, they were declining. And the Fed held interest rates steady, projected some higher inflation, but stable employment. We looked at Chairman Powell. Some of his notes were letting on that still had a good bit of uncertainty about the war and its economic impact or its effect on the economy. Some producer price index that rose more than expected, about 0.7 month over month to about 3.4% year over year. If we looked at manufacturing, that was flat in New York, but continued to expand in Philadelphia. And the January new home sales, now that fell 17% month over month to its slowest pace since 2022. Builders did cut prices amid some weak demand. The median home price now dropped nearly 7% year over year to just around 400,000. Globally, with their central banks, we saw Australia raise interest rates for the second consecutive month in a pretty tight vote. It was about 5-4. The Bank of Japan held rates steady, but signaled some potential for an April rate hike. Central banks in Canada, Europe, in UK kept those rates unchanged, and the UK gilt yield hit its highest level since 2008. Traders expected about a two to three rate hikes in Europe this year, though some economists largely expect no change. So it's a bit on the fence here. If we look at China, they're stronger. They had some stronger than expected retail sales and industrial production. Now, it's going to be about this week ahead, but this week ahead is going to continue to be driven by the Middle East conflict. We're out of earnings season. We're not back into it yet. So that's going to continue to drive the headlines. And that's going to continue to drive volatility in the market, especially the energy market, as we're well into the fourth week of this. So we do have some key economic data that's coming out. So on Tuesday, we'll have the global flash PMIs. That'll be the first report. May show some early effects of higher energy prices. If we look at the U.S. data calendar, it's pretty light. Friday, we'll have some update on consumer sentiment, some more inflation expectations. Then we'll get into some rates and some currency. We did see the 10-year yield shoot up, pretty strong to about 4.4, raising some investor concerns. The U.S. dollar may resume its strength. Overall, if we look at the Fed projections, they showed about 7 of 19 officials now expect no rate cuts in 2026. Now, that was up from 6 in December. We look internationally, we have some upcoming consumer inflation reports coming out in Japan, Australia, and the UK. Primarily, again, going back to the original statement, it's going to be driven by headlines on what's going on in the Middle East in the oil, in the energy markets. Jeremy?
Well, Graham, you had mentioned the volatility in the markets right now and with the Middle East conflict. What do you see for our listeners here? What can they expect going forward now?
Yeah, I think for the foreseeable future, you never know. Headlines come out, some P stocks resume. You know, you could get these quick pops in the market because the market is really oversold. If we look at that S&P oscillator that we like to follow, we're in that really oversold area. So expect headline risk to the upside and downside. So the overall theme that we have is you got to stay on course. You got to stay diversified. You got to stay balanced and really try. And I know sometimes it's hard to really try not to get your emotions to drive your decision making. Stick with your plan, stay with your plan, even though sometimes it's a little challenging. If you feel like you need to do something, right? And we discourage any big moves during times like these. You know, you can always make some adjustments around the edges. We just don't want to make, or would we recommend, any fundamental shifts in relation to what's going on right now in the markets.
Gotcha. Well, Graham, we'd always appreciate the information and expertise, and thanking our listeners that check in with us every single week. And we look forward to seeing you next time. Have a great week.
Take care.